Welcome to the Explainer. Okay, let's dive right in. The financial markets today, well, they were sending some seriously confusing signals. On the surface, things looked pretty quiet, but trust me, just underneath, you had these massive forces pulling in completely opposite directions. So check this out. On one side, you've got big tech just flexing, right? Pushing the Nasdaq up. But then you look over here, and the big industrial companies in the Dow, they're down. And the small cap companies, they got hit even harder, dropping almost 2%, a total split. So what gives, right? Is this just a simple tale of two markets, tech versus the old economy, or is there something deeper going on? We think there is. It looks like we have some major conflicting forces pulling the whole market in different directions. So let's unpack what's really happening here. All right, to figure this all out, we're going to break it down into a few key pieces. First, we'll look at the tale of two chips. That'll tell us a lot about the tech sector. Then, we'll dig into this weird Sell America paradox. It's a real head-scratcher about where the money's flowing. And finally, we'll listen in on some whispers from the Fed to get to the bottom of a mystery that has Wall Street buzzing. Let's get into it. Okay, first up, the tale of two chips. And this story, it really starts with one of the biggest names in tech, a company you definitely know, Intel. Now, until pretty recently, Intel was riding that massive AI hype train for all it was worth. But then, boom, after the market closed, Intel's stock just cratered. It dropped by more than 10%. And why? Well, they basically told investors that their future wasn't looking as rosy as everyone thought, which is pretty shocking, right? Especially when you consider the massive nonstop boom happening in AI. And this right here, this really shows you the insane level of expectation that was baked into Intel's stock price. Investors were valuing it with a price-to-earnings ratio of almost 88. Now, to put that in perspective, its biggest competitor, TSMC, trades at less than 20. So the market was basically saying it expected Intel to be over 4 times more profitable. That's a huge bet. And this really gets to the heart of the problem. Bank of America summed it up perfectly. They said the hype just completely outran the reality. The stock price was priced for perfection, for a flawless future, not for what the company could actually deliver right now. So here's the critical thing to understand. The demand for AI chips is absolutely real. But Intel, well, they stumbled on the basics. Demand for their CPUs was strong, but they just couldn't make enough of them. The manufacturing process for their new chips? Disappointing results. They hinted at a major new customer, but crickets. And worst of all, their new foundry business, their big bet for the future, saw its margins get worse, dropping all the way to negative 55%. Ouch. But here's what's so fascinating about this whole story. Intel's big failure, it didn't drag down the whole chip sector, not at all. In fact, competitors like Nvidia, AMD, and TSMC, the ones who are actually executing, they just kept climbing. And that proves something really important. This wasn't a problem with the AI boom. It was a problem with Intel. All right, so let's zoom out a bit. We've talked about one company, now let's look at the entire US economy. And this brings us to our second big conflict, what we're calling the Sell America paradox. And honestly, this one is a real head-scratcher. Look, on paper, the US economy looks pretty solid, right? By almost every standard measure, things are looking good. You've got consumer sentiment going up, business activity is expanding, and all the recent numbers on retail sales and GDP growth, they've been strong. So with all that good news, you'd think investment money would be just pouring into the US. Stability, growth, that's exactly what big money loves. But, and this is the crazy part, we're seeing signs of the exact opposite. Just look at the data. It's a massive contrast. This month, a huge fund that tracks emerging markets, it saw a record inflow of $6 billion. But at the exact same time, the biggest fund tracking US stocks saw a massive outflow of over $13 billion. That's the biggest chunk of money to leave that fund since last March. The money is literally leaving the US and going somewhere else. So where's it all going? Well, some of it is pouring into things like precious metals. And the trend is crystal clear. Just look at silver. Its price has exploded. It's up over 40% just in January, on track for its best month since 1979. That is a classic flight to safety move, which is a really weird thing to see when the US economy supposedly looks so strong. Okay, and that brings us to our third and maybe the most mysterious piece of this puzzle. There was a sudden,
super dramatic and honestly kind of strange move in the currency markets today, and it's got Wall Street buzzing.
So the US dollar has been really strong lately, but today it just plunged against the Japanese yen. And I mean, it happened fast. In a very short period of time, the exchange rate dropped like a rock. And as soon as that happened, the rumors started flying that this wasn't just the market doing its thing. This was something else entirely. The whispers were about something called a currency check. Now, this is a pretty rare move. It's when a central bank, in this case, supposedly the US Federal Reserve, starts calling up the big banks and asking questions about exchange rates and what's going on in the market. It's widely seen as a major signal that they're paying very close attention and maybe, just maybe, getting ready to step in and do something.
And here's why that's such a big deal. The Fed doesn't just mess around in currency markets on its own. Historically, when they get involved, it's as part of a huge internationally coordinated effort. Think of something like the famous Plaza Accord back in 1985. So the fact that the Fed might even be thinking about this suggests a massive, coordinated move to weaken the dollar could be on the table. So you've got all these conflicting forces swirling around, right? A tech giant stumbling during an AI boom, money fleeing a strong economy, and now a potential move from the world's most powerful central bank. All of this is setting the stage for what is going to be an absolutely critical week for the markets. I mean, just look at the calendar. It's completely packed. You've got the Fed's official meeting on interest rates. You've got a ton of earnings reports from the biggest of the big tech companies, Microsoft, Apple, Alphabet. That's going to give us a real-time report card on AI, on consumer spending, everything. And as if that wasn't enough, we might even hear who the new Fed chair will be, with BlackRock's Rick Rieder now being talked about as a surprise frontrunner. A lot has happened. So, if you take away one thing from all this, it's that the market isn't just one single story right now. It's a giant tug of war between these powerful, competing ideas. You've got the battle of hype versus actual execution. You've got this tension between a strong US economy and big money looking for the exits. And then you have the classic showdown, the market itself versus the looming shadow of the central banks. Every single one of these forces is pulling the market in a different direction. And what happens next week with those big tech earnings and whatever the Federal Reserve says is going to be our next huge clue as to which of these forces will win out and really set the tone for the next few months. This whole conflict, it's about to come to a head.